Welcome. For those of you that are just joining us, it's just about 2 o'clock, so we're just going to wait for a few more people before we get started. I do want to thank everybody for joining us this afternoon, and big thank you to KPMG. We know this is an extremely relevant topic. We've had just over 150 people register for the webinar, so we are going to give it a few minutes for people to join. And with all wonderful things, I think our technology should be going good. Dion Chambers with the Chamber of Commerce, and we do have our special panelists here today from KPMG, so I'm going to introduce them. Then we are going to have about a 40-minute presentation on the federal government economic enhancements, and we'll follow that up with about 15 minutes of questions. So you do have the opportunity on your screen to ask questions. If you can kind of keep them generalized, that'd be great. At the end, we'll try to address as many as we can. We will do a follow-up. We'll send out a copy of the webinar as well as the slide deck at the end. So you'll see that sometime tomorrow morning. So let's get started. Joining us today from KPMG, we have Will Anderson, who has been part of the KPMG Vernon Tax team for 6 months and in practice for over 7 years. As a senior manager, he has a diverse practice and offers clients strategic tax planning, corporate and personal tax services. So welcome, Will.
Thank you.
And we have Geoff Gibbons joining us from KPMG. He's been with the team there for 5 years, specializing in private company tax for the last 3 years. As a tax manager, he helps clients cut through the complexity in areas such as estate planning and tax incentives. So thank you both for joining us today. This is a very, challenging time, and of course, this topic is extremely relevant to our business community, and we're really looking forward to it. We do understand that these changes have been changing on about a daily basis, so it's been quite the process to keep up to date. So I am going to sign off, and I'll hand it over to Will.
Perfect. Thanks, Dion. So Geoff and I are going to go through some of the larger program under the Canada or the CRA's COVID-19 Economic Response Plan. So we're going to be covering some of the larger programs, but there are a number of other programs available, which you can see at canada.ca. First, we're going to touch base on the Canada Emergency Wage Subsidy. So that's our 75% subsidy. Then we're going to talk about the temporary 10% wage subsidy, the Canada Emergency Business Account, which is that $40,000 loan. We're then going to touch base on the Business Credit Availability Program, the CERB, or the Canada Emergency Response Benefit. We're also going to talk about some recent announcements, even up until this morning. I know Geoff was updating his sections, as well as how these programs can be combined to manage your cash flow during these difficult times. So first, we're going to talk about this 75% wage subsidy, which is probably the biggest program in terms of having an impact. It received royal assent on April 11th, and it's a 12-week measure that's going to allow eligible employers to receive a wage subsidy directly from the CRA. And generally, it's going to pay up to about 75% of your pre-crisis wages to a maximum benefit of $847 per week per employee. So the rules are pretty complex in terms of the actual eligibility criteria, but applying is pretty simple, thankfully. So in order to apply for this subsidy, you're going to need to meet all of these requirements, which we'll go through in detail. The first one, you must be an eligible employer. You're going to have to demonstrate a revenue decline. You must be paying the wages to an eligible employee, and the wages themselves must meet the definition of eligible remuneration. And we're going to look at what these look like. So first, the eligible employer test. This is going to include individuals, corporations, excluding public institutions, registered charities, MPOs, labor organizations, certain agricultural organizations, as well as boards of trade or chambers of commerce. It's also going to include partnerships, but each member of that partnership must be one of the eligible employers listed above. If even one of them's not, then all the wages paid under that partnership are out. So employers that are not going to be eligible are municipalities, which are typically incorporated, but this shouldn't impact First Nations, which are generally not incorporated and which are usually considered an individual under the Income Tax Act. Where First Nations might run into trouble in accessing the subsidy is where they're in partnership with a municipality, which is a pretty common structure. And since a municipality is a public institution, one of the partners is not eligible, so the whole partnership will be out. So once you have met that eligible employer test, you're gonna calculate the revenue decline, which will probably be the biggest stumbling block. So on our left, we have our payroll period dates. So that's when you're actually paying the payroll. And you're gonna have to show a reduction in revenue of 15% in March 2020 to be eligible for your pay from March 15th to April 11th. So when you're comparing your March 2020 revenue, you're gonna compare it to either March 2019, or you're gonna look at the average of January and February 2020. And if you have that 15% reduction, you're eligible. One thing to note is that once you choose a method, you must apply it consistently throughout the program. So if you're looking at March 2020 and you use March 2019, you're gonna have to use April 2019 when you're looking at April and so forth. So kind of a planning point here, I think it makes most sense, and you can do this now, is look at your average of January and February 2020 and compare it against March, April, and May 2019, and just determine what's gonna give you the most access to this subsidy. And you're gonna wanna keep in mind that when you're making that decision, that once you're eligible for 1 month, you are automatically eligible for the next month. But you do have to reapply every 4 weeks during the program, even if you're automatically eligible. When you're actually calculating revenue, you're going to be using normal accounting practices. You can use the cash basis. It's mostly going to be the accrual basis for you guys, but once you choose a method, you have to apply it consistently throughout the program. When you're working with a consolidated group, you can calculate the revenue on an individual entity basis. You're most likely going to have the reporting available for this, so it'll make the most sense. But if that individual entity does not meet the test, you can look at revenue on a consolidated group basis. And if you do meet the test at a consolidated basis, each individual entity of that consolidated group is going to be eligible for the subsidy, well, at least for the revenue test. If greater than 90% of your revenue is received from a joint venture, you're going to look right through to the revenue of that joint venture itself. And charities and NPOs can elect to not include government funding in the revenue. And these all must arise from activities that are being carried out in Canada. In terms of your revenue calculations, you're going to be excluding extraordinary items. So these would be something like a significant capital gain potentially in January or February 2020, where it's not part of your ordinary business activities. You would just back that out of your revenue calculation. That's going to require some professional judgment. So keep in mind what your typical activities are and exclude anything that falls outside of that. It's also going to exclude amounts from persons or partnerships that are not dealing at arm's length, unless the eligible entity earns more than 90% of its revenue from those sources. And you're also not going to include the 10% wage subsidy in your revenue calculation. As Jeff's going to talk to, this is taxable income. However, for the purposes of this revenue calculation, you are going to exclude it. So once you've met the eligible employer test, you've met your revenue decline test, you're going to look at the employees you actually paid the wages to. So they must meet the definition of eligible employees. So this is going to be an employee that was employed in Canada, and they can't have been without remuneration for 14 or more consecutive days during that qualifying period. This is basically designed to give employers the ability to retroactively rehire employees, and we're going to talk about that a little bit more later. So once you've met the first 3 tests, you must look at the wages themselves. So wages that are eligible are going to be things like salaries and wages, which would include overtime, vacation pay, taxable benefits, commissions, or other fees. So generally, the rule is if you withhold on it, you're going to include it. If Some things that we aren't going to include are going to be things like stock option benefits, retiring allowances, or amounts that you expect to have the employee actually repay in the future. So you can't pay them now and say, hey, you're going to have to pay me back in the future. So we'll get into the calculation in a minute, but there is also an additional reimbursement equal to the employer portion of the CPP and EI paid to employees on, but these are just for employees on leave, and there's no maximum on that. It's also going to be reduced by any amount benefited from the 10% subsidy, and also reduced by EI received by an employee in a work share program. And so while it is designed to pay about 75% of pre-crisis wages, the CRA is asking that where employers can, that they do their best to pay that extra 25%. So we're going to be referring to baseline remuneration when we're calculating our subsidy. So this is just the average weekly pay from January 1st, 2020 to March 15th, 2020. And it does exclude any period of 7 or more consecutive days where no wages were paid. So if an employee is missing a few days in 1 week and maybe 4 days the next week, but he comes back to work for 2 days in between or 1 day and gets paid, you're still going to have to include that, even though it's going to drive your calculation down. It has to be 7 consecutive days to meet that definition. So first, we're going to look at arm's length employees. So these are just regular employees that have no relationship to the corporation. So for arm's length employees, the subsidy is the greater of 75% of the remuneration paid, up to $847 per week, or the lesser of either the wages paid up to a maximum of $847 per week, or 75% of the employee's baseline remuneration, which is that average weekly pay. So we're going to get into some examples next. So along the top, we have 3 scenarios. The first row is the baseline remuneration, which is that average weekly pay. And the next is the actual wages paid during that qualified period. So in scenario 1, we have an employee who was earning $800 per week pre-crisis and is earning the same wage post-crisis. So their actual wages paid were $800. So the calculation is going to be 75% of the remuneration paid, $600, or the lesser of either the remuneration paid up to $847, which is $800, or 75% of the employee's baseline remuneration, which is $600. So in this case, you get 75% of the wages paid covered by the subsidy. You get a subsidy of $600, and that's because there was no change in pre-crisis and post-crisis wages. In scenario 2, they were earning on average $800 pre-crisis, and we're earning actually $600 post-crisis. So in this situation, our calculation is going to be the greater of that 75% of remuneration paid, $450, or the lesser of the remuneration paid, $600, or 75% of the employee's baseline, which is again $600. So in this situation, the wages paid are $600, the amount of the subsidy is $600. So the full amount of the wages paid are going to be covered. And that's because that baseline remuneration is higher, so you benefit from that calculation. So really the only cost here for employers is going to be the employer portion of CPP and EI. And we're going to talk a little bit more about how this is going to come into play when you're thinking about potentially rehiring employees that have been laid off. In scenario 3, we have baseline remuneration of $1,300 and actual wages paid of $900. So our calculation is going to be the greater of the actual wages paid, $675, or the lesser of the remuneration paid up to a maximum of $847 per week, which is, we're going to bump up against that limit. So it's going to be $847, or 75% of the average pay, which is $975. So here we're going to have a subsidy of $847, $900 actually paid, so a net cost per week of $53 for that employer. So next we're going to talk about non-arm's length employees. So these are employees who are either shareholders or related to shareholders or have a direct interest in the corporation. And so the calculation's a little stickier for them. They don't benefit from the greater of, which we'll see in just a second. It's just the least of amount of eligible remuneration paid in the week, 75% of the baseline, so that's that pre-crisis average weekly pay, and $847. And this is also going to be reduced by that 10% subsidy received, as well as any EI received on a work share program. So in our first example, we are going to look at both an arm's length and non-arm's length situation. And so we're going to assume this is either a new corporation or a seasonal corporation, and there's no baseline remuneration. So they didn't earn any wages from January 1st to March 15th, 2020. And starting March 15th, they started earning wages of $1,000. So for the arm's length employee, the subsidy is going to be the greater of 75% of remuneration paid, which is $750, or the lesser of the remuneration paid, $1,000, $847, or 75% of the employee's baseline remuneration, which is nil. So they benefit from that greater of calculation. They're going to get 75% of that actual wages paid, equal to $750. For non-arm's length employees, on the other hand, they are just going to have a subsidy equal to the lesser of the remuneration paid, which is $1,000, $847, or 75% of the baseline, which is nil. And so you get dragged down by not having the baseline remuneration as a non-arm's length employee. And so you get a nil subsidy, so they aren't eligible. In example 2, again, this is non-arm's length. The shareholder receives $1,200 per week of wages, and that's their baseline remuneration. The shareholder receives $1,000 per week starting March 15th. So the calculation is going to be the least of $847, 75% of their baseline, so $750, and $1,000, which is what was actually paid in the week. So they're going to get a subsidy of $750. So non-arm's length employees can get a subsidy. They just have to have that baseline remuneration. In example 3, we have a shareholder who's receiving an annual wage once a year every December. They got paid a wage of $80,000 in December 2019. So if they decide to start receiving a subsidy or a wage rather of $1,500 per week starting March 15th, there again, they don't have that baseline remuneration. It doesn't look through to 2019, just January 1st to March 15th. So they're going to have a subsidy of nil. Similarly, in example 4, we have a shareholder who's taking dividends instead of salaries. And you could have guessed, since they don't have that baseline remuneration, they're again going to get a subsidy of nil. They weren't earning any eligible wages during that January 1st to March 15th period. So there are some anti-avoidance rules. So the penalty right now is repayment of the wage subsidy if you don't meet the eligibility requirements and you still apply and receive the subsidy. There's going to be an additional penalty of 25% if you artificially reduce your revenue for the purposes of claiming the subsidy. And in addition, you're going to have to repay that subsidy. So when applying, the employer is basically attesting to that decline in revenue. And they're taking it pretty seriously. There's also going to be additional penalties for fraudulent claims that include fines and potentially even imprisonment. In terms of actually applying, so yesterday the CRA released an online calculator, which is actually really robust. I was playing around with it a bit. It has options for different payroll frequencies and kind of walks you through step by step. So I think the most complicated part here, and Jeff's going to touch on this too, is that determining whether you're eligible is going to be complicated, but actually applying is not that complicated. So you can apply using either My Business Account or an online application, which is going to be released April 27th, or have your representative apply using Represent a Client. And you're going to need to calculate your revenue decline, like we mentioned, the amount of the subsidy itself, which you can use that online calculator, and the eligible period. So again, you are going to need to reapply monthly throughout the duration of the program. So just because you're eligible doesn't mean you've applied. So make sure you're staying on top of this. The wage subsidy is going to be processed at the payroll account level. So for wages paid through each RP account, you're going to need to file a separate application. It's also going to be important to maintain support for both the revenue decline and the wages paid, as the CRA is likely going to be auditing some of these claims. And the CRA has also mentioned that they're going to be asking for a detailed listing of employees and their SIN numbers if they are looking at it. So just make sure to have those handy and have all your support kind of buttoned down and saved for in case they do actually ask for it. And finally, the amount of the subsidy received will be considered government assistance, and it's going to be included in both your accounting income and your taxable income in the year received. So you will pay tax on any portion of the subsidy that you do receive. So we're going to touch now on a planning consideration, which is retroactively rehiring employees which have previously been laid off. If you're going to do this, the biggest thing is that you have to pay them prior to claiming the 75% subsidy. So if they've been laid off, likely they're claiming the CERB. And if that's the case, then they're going to have to repay a portion or all of that. So it's really important to open up a dialogue and clearly communicate this to your employees. This is going to be pretty desirable where you have talented employees or employees with continuity that you want to retain. And by retroactively rehiring them, you can actually pay them more than they would have received under the CERB with very little cost to you as an employer. And so when the economy does reopen, you'll be able to kind of hit the ground running. So we're going to go through a quick example of what it would look like if you retroactively rehire versus paying them receiving the CERB. So in our example, they have that average weekly pay of $1,200, actual wages of $800. So their subsidy is going to be equal to that actual pay. It's going to be $800. So again, here, it's a situation where they have that higher baseline remuneration, what they're actually being paid. And so all of the subsidy is going to be, or all of the wages paid are going to be covered by the subsidy. So in that 4-week period, you could be, with the only cost being CPP and EI, you could be paying that employee $3,200, and which is, you know, an extra $1,200 over the CERB. But again, that one caveat is that you must pay those employees before you claim the wage subsidy. And so it's going to be a decision you need to make relatively quickly. Those applications do open up on April 27th. So right now, the break-even point kind of on that is about $670 per week in terms of what you'd have to pay in order to beat the CERB. With that, I am going to turn it over to Geoff.
Excellent. Thank you, Will. So now that Will's highlighted the details of the 75% wage subsidy, I think he's done a really good job of helping us understand, first of all, which businesses are eligible, which won't be, how to calculate the amounts you can expect to receive. In addition, how to apply on April 27th when the applications do open, and the implications to your organization if you do end up receiving the subsidy. So my daunting task is to go through the remaining programs that are part of Canada's COVID-19 economic response plan. But keep in mind here that we're really looking through the lens of what is applicable to the Vernon business community. So this by no means is an exhaustive list. We do have an appendix where that does, as of today's date, have the majority of the programs that are available. So that being said, I'm going to jump right away into the temporary 10% wage subsidy to conclude our discussion today on the wage subsidies that are available as of today's date. Sorry, just having trouble switching slides. Here we go. So this one is the TWS. Even as an accountant, I'm kind of getting sick of all the acronyms. So this is a measure that's meant to help support small businesses with their cash flow, and keeping in mind, just like the 75% wage subsidy, really to help prevent layoffs and really encouraging employers to hire back employees where they can. The amount of this particular subsidy is calculated based on 10% of the remuneration that's paid to employees during the period of March 18th to June 20th. And when I say remuneration, what that means is really any amounts that would have had taxes withheld on. So it won't include things like CPP and EI premiums. And there is a maximum amount that can be received for each employer. This will include $1,375 per employee, up to a maximum amount of $25,000 per employer. So when you're calculating the amount of this subsidy, if you're eligible to receive it, what an eligible employee is any individual that's employed in Canada. So quite broad there. Where the legislation does get rather complex is when we're looking at what an eligible employee is. What an eligible employer is. So eligible employers include Canadian-controlled private corporations, partnerships, individuals, but not trusts, charities, and not-for-profits. So like I said, it does get complex, and specifically when we're looking at things like Canadian-controlled private corporations. So those that would be considered eligible employers are those corporations that have taxation years that end before the period of March 18th, 2020, when they're having access to the small business limit. So what that means is for groups of companies that are associated, they need to have a taxable paid up capital of less than 15 million for the whole group. And that corporation that's trying to get the eligible employer status will need to also be allocated at least $1 of the small business deduction. So this is definitely something you're going to want to check with your accountant if you're not sure about. On the other hand, partnerships that are considered eligible employers, those are partnerships where each of the partners that make up the partnership on a standalone basis would be considered an eligible employer. So this will be in cases where a partnership is entirely CCPCs that are eligible employers, or let's say a partnership that's made up entirely of individuals. In both cases, those would be eligible. So much like all of the other rules that we're seeing, it seems that the legislation is complex, but the administration is quite straightforward. So in this particular case, there's no application that's required. How the employer makes the claim, if eligible, is simply by reducing their payroll remittances on income taxes that would otherwise be withheld and remitted to the government as part of payroll runs. So you still need to keep in mind that the employer must fully remit CPP and EI premiums, being the employer and employee portion. So for further clarity, how the employer receives a subsidy is what they do is when they're making their payroll remittance to the government, they simply keep the portion of that amounts to the subsidy that's owed to them while making sure that they're continuing to make the full CPP and EI premium payments. So what I'll do is I'll go through a quick example of exactly what this will look like. So if we take ABC Company, for example, they have 5 employees where each of them earn salaries of $5,000 per month. So this runs for the period of March 18th to June 20th. So I've got 2 separate columns here. One is looking at what it would look like for the first month, and then second would be for the full 3-month period. So in the first month, the total remuneration paid would be $5,000 per 5 employees, so $25,000. And how we calculate the subsidy is it's 10% of the remuneration that was paid in that period. So $2,500 in the first month. And if you remember, there's maximum amounts. So the first maximum that we'll look at is $1,375 per employee, and there's 5 employees. So that's going to cap out at $6,875. The next maximum we aren't going to reach at all is $25,000 per employer. So in the first month, we see that the least of those amounts is the 10% of the remuneration paid, being $2,500. So that's the amount of the subsidy that ABC Co. is going to receive in the first and the second month. If we look at the second column though, so this is for the full 3-month period, March 18th to June 20th, 10% of the remuneration is $7,500, but since the maximum amount per eligible employee caps out at $6,875, that's the maximum amount of the subsidy that ABC Co is going to receive. So what that means is in the third month, the amount of the subsidy received is going to be $1,875, not the $2,500 like the previous 2 months. How ABC Co is going to receive this subsidy is they're going to reduce their payroll remittances by the amount of the subsidy that they're entitled to, but ensuring that they're still making the CPP and EI premiums. So for the first 2 months, when they're making the payroll remittances to the government, they're going to keep for themselves the $2,500 in the first 2 months, and then $1,875 in the third month, and they're going to use that cash to help fund their operations instead of remitting it to the government. So this is, believe it or not, a pretty straightforward example. I doubt that the majority of payroll is going to look like this, because most employees, they earn different amounts. And if they're on an hourly wage, then each month, each pay period is going to have different remuneration paid to them. So these calculations can get pretty involved pretty quickly. So this is something that we're helping a lot of our clients figure out how to do. So I do suggest that you reach out to your accountant if you do need assistance with this. Some things to keep in mind with respect to this 10% wage subsidy. Like I've said, the rules behind it are quite complex, specifically with respect to the determination of what an eligible employer is. So be sure you meet the criteria before you reduce your withholdings, and check with your accountant just to make sure. The onus is on the employer to track the subsidy received. So like I said, you really need to be careful with the calculations here because they can get quite involved quite quickly. As Will was saying before, if you're expecting as an employer to receive the 75% subsidy, the government has said that first, if eligible, you must claim this 10% subsidy first, and then in your application for the 75% subsidy, remove that from the calculation. So once again, this is going to be something that we're working with our clients to make sure that we provide them assistance where we can. So check with your accountant if you do need help with this. One thing I do want to mention though, and this is just a planning point, is if you have a group of companies where corporations are associated, each individual company that meets the criteria of eligible employer can make this claim. And we definitely suggest doing so, because this is just cash on the table that's available from the government. And much like the 75% subsidy, when the subsidy is received, it will be considered taxable income for the employer. So do expect to pay tax on this. And with that being said, that'll conclude our discussion today on the wage subsidy programs that are currently available. But we're welcome to take questions at the end. So I'm going to shift gears a little bit here, though, and move more into some of the programs that the government has launched, and the idea to help small and medium-sized businesses kind of in the challenging times that we're faced with, especially if they're struggling with a cash crunch. So first, I'm going to go through the Canada Emergency Business Account. You may have heard of this program. It's worth about $25 billion, and the idea is to help small businesses get access to some really favorable terms for loans. So particularly, this is a $40,000 interest-free loan for qualifying businesses, and the key feature to this loan, other than it's interest-free, is that up to a quarter of the loan that's issued will be forgivable. And it'll be forgivable in the sense that 3/4 of the full amount of the loan is repaid before 2022. Even though if you miss out on that though, the remaining balance of the loan at the end of 2022 will be converted into a 3-year term loan at 5% interest. So these are some pretty good terms, and we're suggesting that any of our clients that are eligible to receive this, that they make sure that they jump on this right away. So qualifying businesses, those include those that had payroll between 20,000 and 1.5 million in 2019, and were still in operation on March 1st, 2020. Unfortunately, this is limited to corporations, nonprofit organizations, and charities. So it does not include individuals, trusts, and government bodies. And I want to clarify as well that for groups of companies where corporations are associated, each qualifying business in a corporate group can receive this loan. So there's potential abilities for each company, if they're eligible within a corporate group, to receive this and the forgivable portion. So just cash that's on the table for you. In order to apply, and you'll actually need to contact your existing financial institution directly. So they're the ones that'll first be able to help you determine whether or not you meet the criteria. And second, they'll help you with the applications to help get the funds as soon as possible. So for a lot of businesses, that $40,000 loan won't be enough, or maybe businesses aren't eligible for that. I'm going to speak now to another program called the Business Credit Availability Program, and this is for funds that are quite more substantial than that $40,000 loan. So these are loans for small and medium-sized businesses. They're offered through EDC and BDC, and these are loans up to $6.25 million per business. So like I said, pretty substantial. Typically, they're offered in 3 separate segments, one being for businesses with revenues below 1 million, you're looking at a maximum loan of about $312,500. For businesses with revenues between 1 and 50 million in 2019, you're looking at a maximum loan of just over 3 million. And finally, the third segment, if your revenues are over 50 million, they're offering loans of just over 6 million, up to, I should clarify. Our understanding at this point is that the terms of these loans are typically interest-only payments for the first 12 months, with a further 10-year repayment period after that. As far as who's eligible, Canadian businesses across the board that were otherwise financially viable and earning revenue before the COVID-19 outbreak, those are the ones that are eligible. The funds do need to be used for operational expenses. And to apply and for more details, we strongly suggest that you do reach out to your existing financial institution, as they're the ones who are going to help you ensure whether or not you're first eligible and get those applications out as soon as possible to get the cash in your pockets. I'm going to next move quickly into the Canada Emergency Response Benefit, or the CERB that we'll refer to a few times. And the reason for this is there's been a lot of significant changes to this particular program. So I want to let you know what it looks like as of today's date. So the CERB is a $2,000 per month taxable benefit for workers that are facing loss of income for reasons related directly to COVID-19. In order to be eligible, individuals, they need to reside in Canada and be at least the age of 16. They can't have received EI benefits for the same period, and it can't be because they quit their job voluntarily. One item that's new about this is individuals can receive income of up to $1,000 per month during the period of the claim. Before it was, your income had to go to zero. So this opens the door to quite a few people. You can also claim this CERB if you've run out of EI coverage due to COVID-19 in 2020. So that's beneficial to a lot of people as well. Another criteria for this is that you'll need to have earned income of at least $5,000 before tax in the last 12 months or in calendar 2019. These sources of income can be either through employment, self-employment, or maternity paternity benefits. As far as how the applications work though, you can apply either on CRA or Service Canada's website or by phone. So once again, the rules can be quite complex, but we've noticed that it seems like the administration of all of these separate programs are quite straightforward. So applying online is very, very easy. And similar to the 75% wage subsidy that Will was talking about, the application does need to be remade for each period that you're eligible. So for each 4-week period that you remain eligible, you're going to have to continue reapplying. The maximum coverage will be for a total of 16 weeks of coverage, meaning up to $8,000 per individual that's eligible. Payments are being made by direct deposit if you're registered within 3 days, or by check if you're not registered with the CRA for direct deposit, and those are received within 10 business days. In all cases, from my discussions with clients, their payments have been received promptly, well within these timelines. So that's great to see that cash is actually hitting the pockets of those that are impacted. In the case that an employee were to either return to work earlier than expected, or in the scenario where Will is talking about, where let's say an employer is planning on retroactively hiring back their employees in order to claim that 75% wage subsidy, it's really important to note that the employee will have to repay the portion of the CERB or EI that they end up not being eligible to receive because of that retroactive payment. And shifting gears yet again, it seems like there isn't a day where some new programs aren't announced. So I'll be going through some of the other recent announcements. But first, one that we've received quite a few calls and emails from our clients, and that's the Canada Emergency Commercial Rent Assistance Program. So this isn't necessarily all that new of an announcement, but what it is, it's a program for small businesses, and the idea behind it is to help them and the commercial property owners, the landlords, help bridge the gap there to help provide assistance for rent payments from April, May, and June. So that being said, because the responsibility of the property owner-tenant relationships lie with provincial government, so British Columbia, this is going to be a partnership between the federal government and the province of British Columbia. And because of that, it's taking a little bit more time. So that's all the details we have as of today's date, but definitely there will be more details to follow. So stay tuned. What is new today is the Prime Minister announced the Canada Emergency Student Benefit. And this is a $1,250 per month benefit for the period of May to August for students and recent graduates that aren't currently eligible for CERB, that $2,000 benefit. This is increased by a further $500 for a total of $1,750 for those with disabilities or those supporting others. And similar to the CERB, it's available for students that are earning less than $1,000 per month. So those students will still be eligible to receive this. And also announced today, students who do volunteer over the summer supporting COVID-19 initiatives, they can expect to receive between $1,000 and $5,000 depending on the hours they volunteer. So as this was a program that was just announced today, those are all the details we have at this time. But similar to the commercial rent program, stay tuned, we'll have more details to follow. And I do want to leave you with a few planning considerations as far as in this challenging time that we're faced with, what your business can do to utilize some of these programs in combinations that we've talked about today in order to manage your cash flow while we're faced with this challenging time. So, and trying to be as general as possible. Our general advice to most of our clients is step one, contact your existing financial institution and see what they can do for you. So ideally, you're going to first want to confirm whether or not you're eligible for the $40,000 loan that I referred to. And the reason for that is up to a quarter of what you receive, so up to $10,000, may be forgiven as long as you repay the remaining 3 quarters before the end of 2022. So that's just cash on the table. And when we're looking at groups of corporations where corporations are associated, for each eligible business, they can receive that loan on a standalone basis. So there's opportunities for corporate groups to multiply this loan and can add up to a lot of money. If that's not enough to help your business stay afloat, or if you're just finding that you're having trouble managing your working capital, or even if you're just trying to get additional lending for operational expenses, definitely same thing, contact your existing financial institution and see what additional financing might be available for you. So there's a lot of financing available through EDC and BDC. So you do want to capture that if you can. Kind of like the next step would be to work with your finance team and your accountant to see if you're eligible for any of these wage subsidies we've discussed today. If you are eligible, first of all, you'll need to claim the 10% subsidy, like I said, if you are eligible, and you'll want to reduce the payroll remittances immediately if you haven't already done so. So this is going to help you manage your working capital and keep that cash in your company's bank account. Next, when applications open on April 27th, you're going to want to apply for the 75% subsidy that Will talked about if you're eligible. You'll also want to have an idea of how you're going to actually make, which measures you're going to want to use, and an idea whether or not you do meet those revenue requirements. And that being said, in the case that you are an employer that you are going to apply for the 75% wage subsidy, but let's say you've already laid off your employees and they're currently on either EI or CERB. In order to maximize that 75% subsidy and put every dollar you can into the pocket of your employees, what you're going to want to consider doing is, maybe if you don't have the cash on hand, you're going to want to bridge your financing by possibly using some of those loans offered by EDC and BDC in order to recall and retroactively pay your employees the wages that you otherwise would have paid them if you didn't lay them off, before making that 75% wage subsidy application. So like Will said, the wages have to be paid to your employees before the application's made in order to receive it. So those are just a few takeaways and some general planning considerations that you can use multiple programs in combination to help manage your cash flow. That being said, I know we did cover quite a few topics rather quickly. So I'd really like to thank you for your time today. And with that, we'll open up the floor to any other questions that you may have.
Thank you, Will and Geoff. That was very comprehensive, and I'm with you with the acronyms. I think
we just stopped.
I think you have to. So as Geoff said, we are opening this up for questions now, so you can pop that in the Q&A at the bottom, and we'll get to as many as we can. Just to confirm, we will be providing the slide deck for everybody who registered, so you will get a copy of that tomorrow, as well as a copy of the webinar. So if you want to go back and review it, that will be available for you. So I'm going to start with the first question here. And I'm gonna say, does the 75% subsidy apply to employees who are working reduced hours but being paid for full hours? And I think you kind of touched on that a little bit, but.
Yeah, if they're still being paid the wages, even if they're working reduced hours, so that's exactly the situation where CRA is asking even if they're working reduced hours, to pay that extra 25%. So yeah, those wages would absolutely be eligible.
Okay. And how about a company? Can they receive the 75% wage subsidy as well as the CEBA?
Yeah, so the answer there is yes, but you do need to be careful because the eligibility criteria are separate. So you're going to need to make sure that you are eligible for the 75% criteria in order to receive that, and eligible to receive the $40,000 loan. So yes.
For the 75% wage subsidy, is there any direction on if a new employee is hired today, would their salary be eligible for the 75%?
Yeah, it would. So like I had kind of mentioned in that arm's length versus non-arm's length example, in that situation, they had no baseline remuneration, so no salaries from January 1st to March 15th. But as long as they're an arm's length employee, so they have no special connection to the corporation, you are going to be able to claim a subsidy on those. So that's just to make sure that no seasonal businesses or brand new startups are left out. Yeah, so they will be eligible.
And I mean, that's really good. That was a gap that was identified pretty early on, for sure. And I think this is interesting. This question has come up, and it also surprised me. I mean, I've been following the news, but to be clear, you have to apply for that 10% first, and then apply for the 75%. So you have to go through that. So anybody on here today should already be applying for that 10% if they're looking towards a 75% wage subsidy.
Yeah.
Okay.
Yeah, and it's glaring when you actually do the 75% calculation in that calculator. You just have to fill in that box. So you'll see it. They'll remind you, and yeah, but you should be claiming that 10% first. And I think that's mostly because that's cash you're retaining versus this is cash they're dishing out on top of it. So I think it's probably a cash flow management thing on their end as well.
For sure. Now, what happens if you didn't apply for that 10% by the time it opens up at the end of the month? Is it? Can you do that at that time?
Yeah, I think it's something you would do retroactively.
Yeah, so it is retroactive. What the Department of Finance has said, if because there's no application for the 10% subsidy. It's just something that the employer can reduce their withholdings. So at the end of the period when they're doing their payroll, if you actually didn't reduce your remittances by that amount, what the government has said is at that time they will provide a refund in that amount that you should have claimed. But if you are claiming the 75% subsidy, you do need to reduce it by the 10% subsidy. So it's just something you should do. I think that's going to be the right answer.
Yeah. And I think that there was a previous question here too. If you missed it in March, you can still calculate it in your April remittance, correct?
That's right. Yeah. But you do need to, the one thing that you do need to be sure that you're doing is the wages still need to be paid in that period. So you can't, it's because the subsidy is based on 10% of the remuneration paid.
Okay.
So
now this one's a little bit different, and I know it might be a little bit more specific, but if you have an organization or a company that has locations with revenue reductions in one area but not in other areas, so company-wide revenues, would you still qualify for that 75% wage subsidy?
I think it's going to be dependent upon the legal structure. And so if it's just a corporation with different divisions all underneath that one corporation, I think you're going to have to be calculating your revenue decline at that legal entity basis. So if you're not meeting it, again, you can look to potentially a consolidated group calculation. But you can't calculate it just based on different divisions, which is basically just based on your financial reporting.
Okay.
Yeah.
Now this one, it says for charities and nonprofit organizations, is revenue considered donations and investment gains losses, i.e. line 4700 from T301. This is really accounting talk here for you guys. Line 4700 from T3010, but for the time period in question.
So I think it's going to include everything that an MPO would normally include in revenue, and with the exception of government assistance, which you can elect out of. So that's the general answer.
Okay.
Yeah, and then also further there, you need to exclude normalizing items as well. So that depends. It's on an organization by organization basis.
Okay.
Yeah.
Can you just define what do you mean by normalizing?
So that's backing out any extraordinary items that typically wouldn't arise as part of your normal activities. Yeah.
Okay, perfect. Now, we want to touch on non-arm's length. So somebody wants to know, son-in-law of shareholder, is that non-arm's length?
Do you know off the top of your head, Jeff?
Yeah, so that will be non-arm's length. So,
okay.
Yeah.
I believe you said that CEBA does not apply to individuals. Does that mean that sole proprietorships do not qualify?
That's correct, yeah. So unfortunately, it won't be available to sole proprietorships, but then other funding through EDC and BDC should be available. So my suggestion there is if you're looking to get a loan, whether it's this $40,000 or another loan at this point with favorable terms, just check with your existing financial institution and they should be able to help walk you through which ones you're eligible for, which ones, and run through the terms of those loans and kind of get the ball rolling as quickly as possible. So check with your financial institution on that one.
Okay, perfect. So the 10% is not an actual application like the 75% subsidy, but rather just a reduction in the remittances by the 10%.
That's,
This is
yeah.
coming up a lot. Okay.
Yeah, so that one, it's an interesting measure, but the idea is when you're paying your employees, you need to be withholding remittances that you're going to send the government. So the idea here, the government's saying, well, you can figure out what amount of the subsidy you're eligible for and just keep that and then send us the rest. So I do foresee that there will be quite a bit of audit activity around this. So that's why we're really trying to emphasize that you need to make sure you're getting it right.
Yeah, I could see the complication in that down the road, for sure. All right, and again, confirming the CERB is available to 15-year-olds, not just 16 and older.
It's over 15 years, so 16 and older.
Sorry, 15 and over?
Sorry, it's over 15, so those that are 16 and older when they're making the claim. So not 15-year-olds.
Not 15-year-olds. So you have to be 16 years old plus 1 day?
Or just, yeah, plus 0 days.
Okay, all right. Okay. If an employee starts to work significantly more than their January 1st to March 15th average, i.e. 10 hours per week, and now they're 30 hours per week, is the 75% wage subsidy going to max out on the 10 hours?
It's going to be dependent on their hourly wage. So the maximum limit per week is going to be $847. So for a arm's length employee, then it's just going to be dependent on that hourly wage. So if they're making more than $847 per week, then it's going to max out. If they're making less than that, then it will be dependent on that calculation.
Okay.
Yeah.
And is that, you can figure that out through that calculator probably, is that?
Yeah, for sure.
Yeah.
Like I encourage everyone to go out and check out that calculator. It actually works really well and is fairly simplified and applies to a number of different situations. And once you start entering the numbers in and playing around with a few examples, you're going to be able to find out pretty much what you're going to get over the course of this program if you know your payroll in advance. Yeah.
Okay, and this one is a little bit different. So if you don't qualify for the first 75% subsidy period, but you will for the next 2 pay periods, do you apply on April 27th or do you wait to the next time frame?
I'm not quite sure on that. They just announced yesterday that we're going to be able to apply on April 27th. So I would think that you're going to have to wait until the wages are paid for that qualifying period, which the second qualifying period will extend into May. So you're going to have to wait until that qualifying period is over, I think, before you can apply. But stay tuned because the actual administrative process of applying for these subsidies is changing every day, and well, they kind of scramble to figure it out themselves.
Okay, when choosing cash or accrual basis for revenue, is this just for the wage subsidy calculation, or does this also change your financial statement preparation?
This should just be your wage subsidy calculation.
Mm-hmm.
You don't have to forever commit to the cash basis. Yeah.
Okay. As part of the CEWS subsidy, are we allowed to use a portion of those funds to give our employees pay raises in frontline COVID positions?
Yeah, I think so. I mean, you can pay your employees whatever you want, and if you're going to turn around and give part of that subsidy to your employees in the form of increased wages, yeah, there's no problem with that from a legislative perspective, but so I don't think there's any issue with that at all.
Okay. And can you qualify for the $40,000 loan if you don't go for the 75% wage subsidy? So you don't have to.
Yeah, absolutely. There's 2 different criteria there. So each of these programs that we've talked about are on a standalone basis. So the only one that is integrated together is a 10% subsidy and the 75% subsidy. In the case that you do apply for the 75% subsidy, you will be required to first see if you're eligible for the 10% one and reduce your withholdings for that. So.
Okay. Can you confirm that even after June, you can apply the 10% TWS to remittances after the period in order to get the maximum subsidy?
So for that one, so there's no application for the 10% subsidy. But that being said, you can, if you don't make those reductions in remittances, yes, you can claim those at a later time by reducing your remittances. So you're just going to catch up on the amounts that you didn't reduce your remittances previously.
Okay. And we're circling back again to the age here. So we've got a comment saying the CERB on Canada site says criteria is if you're 15 years old or more when you apply. So just circling back to that age.
Here, so they have announced some, yeah, they keep changing this. So just give me one sec.
Sure.
Yes, or at least 15 years old. So you're right. So they have
Okay.
extended the criteria there. So apologies there.
No worries. And I think that wraps it up. We're at 3 o'clock. So I know we didn't get to all the questions, but we will, we can send those out. If you had anything further, you can contact us at the Chamber. And of course, Will and Jeff's information is available on the slide if you want to connect with them directly. And again, tomorrow we will send out a copy of the webinar as well as the slide deck for you. As always, we are here for you at the Chamber. So do call if you have any questions or email us, and anything that we can do to help out. We will definitely try or get you connected to the right folks. And thank you so much, Will and Jeff, for joining us today. Very good information, and thank you again.
Yeah,
Great.
great.
Thanks, Dion.
Thanks so much.
Thanks for having us.
Yeah.
Bye-bye.
Bye.
See you, everybody.